Here at the Case Investment Summit, John Koudounis, he's Calamos Investments President and CEO. Welcome. It's good to see you here.
Good to be here, Scott. Thank you.
Let's just get your take and your temperature, if you will, of what you think this market is going to do from here.
Well, I think we're going to continue to get a lot of volatility given what's happening around the world. I mean, we've got wars that are happening. We've got an election that's going to be very close either way. And so the markets are going to be going up and down. And, one thing we have to look at, a lot of the equity markets are still in, almost all-time highs. And you look at S&P, we've got potentially around 22%, price earning, forward price earning. So I think it's almost fully baked, at least given where history's been.
Yeah.
So a lot of allocators have to look at that when they make decisions going forward.
Are you surprised at the resiliency of the market, given how you started your answer? All of these things have been in the face of this market, and then new ones pop up, and yes, they may take a toll for a day or so, but for the most part, we've been able to consistently bounce back and hit these record highs that you reference.
Our markets have been very resilient, especially the United States has been very resilient. And we can't, confuse the markets with the economy either, and that's what a lot of people do. I mean, there's still issues that are underlying in the economy. We had a good, better than expected jobs report, but then inflation came in really hot as well. So people have to look at all of that. But I'm not surprised. The U.S. economies and the world economies been pretty optimistic, and I think we're going to continue to see that.
So was 50 basis points a mistake? I know you had urged the Fed to do something because you thought rates were too high. Was 50 too much?
No, I don't think it was too much. I think they should have started earlier. I think given the information, they probably won't do another 50. I think it may have sent some, bad signals as to why they thought they had to do 50 rather than do it earlier and 25 at each time. But at the end of the day, they're going to get where they want to go, and I think it's not going to be that substantial.
Okay, so we start out talking about the stock market. We are here at an alternatives conference, which you have made a bigger part of your business too.
Sure.
Why?
Well, look, it's part of our DNA. Our founder, John Calamos, is basically the founder of Convertibles. He's written a couple of books. We've been in business for over 47 years. Alternatives has been in our DNA. Convertibles, we're the biggest convertible buyer in the country, number 2 in the world. And in liquid alts, we're top 3 behind JP Morgan and BlackRock. So it's in our DNA, and we're going from liquid to more privates. And so we've launched some interval funds in private credit, and we're incubating a couple more with our partners at Axia, which has been very successful.
Yeah. So what do you say? I know you just mentioned private credit, which has me thinking, where are we in the cycle of this kind of stuff? Where people hear, and we've had conversations, as I referenced earlier, is private credit a bubble? Are we at peak alts? Because now everybody wants alternative products to offer to retail investors. How would you answer that?
Well, if you look at all the allocations, they continue to increase their allocations in a lot of these portfolios in alternatives. And that we're not seeing that go away. We're starting to see a blend between public and private markets. And that's something that's been very, very interesting, especially with the instruments and wrappers that you have now that are giving you a little bit more liquidity, giving you returns right away. And so I think the private markets, especially private credit and private equity, are clearly here to stay.
And you don't have any concern that retail investors who are looking at this and hearing about the prospects of better risk-adjusted returns going forward don't know enough about what they're being invested in as these products are made more available through the wealth advisor channel.
Well, especially here in the RIA channels, that's increasingly growing versus some of the wirehouses that been the traditional way to put product into retail. Look, it's a continual education process, but the democratization of these products to mom and pop, and this is a lot of what we do, is a real big thing, and it's a great thing. When you can invest with as little as $2,500 and be side by side with some of the greatest private investors like Apollo, Carlyle, Blackstone. It's something that's unique. It has not been done in the past, and I think there's a lot of appetite for that, especially as education grows, where they can get the returns traditionally that only professional investors and really ultra high net worth individuals have had.
Right, it used to be if you don't have, I don't know, you pick a number out of a hat, $5 million
minimum
of investable asset minimum, it's like, don't even bother knocking on our door.
You couldn't get into these funds.
It's changing now.
Big time, yes.
And you think that's just going to continue to go that direction?
I think the market's changing completely. I think that these interval funds, especially, the liquidity that you have, some are like 5% per quarter, which is better than no liquidity or 5-10-year lockup, is a big deal. No K1s, which has been something that a lot of people don't want to deal with. So that's a great thing as well. And being able to get return on your assets from day one and not waiting for a drawdown 2, 3, 4, 5 years. So I think a lot of the market's going to go to these products. We're starting to see a lot more issuance in these products. And the true privates are going to be probably hold for the big institutions that want allocations to have an SMA in a particular sector where they're doing $5, $6 billion increments, where a manager will just invest for that.
We appreciate your time so very much. Thanks for being with us.
Thank you very much.